Welcome, guys, to another roundtable with us. My name is Adam, Victor,
Hi everyone.
Rusmin, and today,
Hello.
big guy here, Kenny. All right. So this roundtable is about how someone made 1,344% investing in Gamestop. All right. Unfortunately, it's not me. It's Kenny over here. So give him a round.
Yeah,
So
to the moon.
So we're going to find out during this discussion why Kenny got into GameStop back in, was it September?
March last year.
March, actually. So actually we wrote an article, and if you check out our website, you can search GameStop on fifthperson.com. Kenny actually wrote an article about GameStop back in March 2020. And that was his thesis and why he was interested in the stock. And he actually bought and held on to it until very recently. So we're going to discuss with Kenny what his rationale is and what his reasons were for buying and then subsequently selling the stock. And then we're going to cover about what's happening with GameStop right now as well, because I think this is everywhere. It's on mainstream news, and we all want to know what's happening with GameStop as well. So Kenny, tell us a bit more. I think the first thing that people want to know is, how much did you buy? How much did you sell?
Wow.
At what price?
At what price?
At what price?
At
So,
what
okay,
price?
okay.
Stock price. No. We'll keep your positions private. But yeah, what price did you buy and sell?
So I bought at 450 and I sold at 65. So unfortunately, I didn't get to the moon. I just reached the sky and just
In less than a year, right?
Less than a year.
less than a year.
Which is impressive.
Yeah.
So, I mean, not many people would have noticed GameStop back in March. I think at the point it was during the pandemic, people were looking at a lot of stocks at that point in time. So how did you find out about GameStop and why did you actually buy it?
Oh, actually, it was March last year. So I was very interested in investing in a turnaround kind of business or deep value business. So the first thing I did was I searched for stocks with the highest short interest. So then the first thing that came on the list was GameStop. And I remember back then when I was in the US, I went to GameStop to buy a used Xbox to play. And then that time I was looking at the stock because I was new to investing, right? I want to find stocks to invest. And then I saw it went from around $4 something to like $60. Then I was like, oh my God, when the next wave comes, I'm going to catch it. But back then I didn't know what it was. So when I saw that stock and I looked deep into it, then I realized that, there's something to it. There's a very interesting story to it, because the thing is, it was short by 100%, and a lot of people think that they will go bankrupt, almost like Blockbuster or RadioShack, because more and more people are buying their games online, and they're no longer going to shops. And if you have Amazon, why would you want to buy your consoles through GameStop, right? I think the market is too negative about the outlook of GameStop. But because back then when I bought GameStop, it was trading at $300 million. They have a cash of $290 million, and they have an inventory of $1.3 billion and a total debt of about $420 million. So in actual sense, if they were to sell off their inventory at 50% off, and in total with their cash, they could more than cover for their debt. Yeah, right. So then in a way, there's not much for me to lose, but there are a lot of upsides to it. But when I look at the deep value, I always want to make sure that there's a catalyst to this business, right? And the catalyst is basically a console cycle. If you look at GameStop price chart, you can see there are two mountains over there. The first two mountains is due to the console cycle. So the sale of console is the tide that lifts all boats, and that's where the sale of accessories and games and pre-owned games, that's where it all comes in. But the thing is, this will all happen in November or December. So there's a timeline to it. There's something that I can monitor the developments, and I don't think that the vendors like Sony and Microsoft, they will skip out on GameStop and sell directly, because GameStop is one of their largest distribution channel in US. Gamers, right, Adam? I'm sure you know.
Yeah, I was looking forward to PlayStation 5. I mean, every time there's a new console cycle, I've been a PlayStation player since number 1, right? 1, 2, 3, 4, 5. So I know exactly what happens every time a new generation comes out. People are really excited. I get really excited. Prices of consoles go very high because it's new. There's a lot of demand, and you look forward to all these new games with these new graphics and the possibilities of how games could be. And I bought every single console cycle. I'm still waiting for my PlayStation 5 because the demand is crazy. And the thing about this console cycle is that the demand usually lasts for at least a year. I usually don't buy it straight away. I kind of like wait for the new games to come out, so there are new games to play on a new system. Things could get a little bit cheaper. Maybe they iron out some bugs in the system as well. And so the cycle could actually last for a year or so. You see this peak in revenue and sales, and then you just carry on from that, and there's a lot of demand from gaming anyway. It's a big industry.
Yeah, so I don't think it will go away. And based on my estimate, I think they will bring in about 100 to 200 million dollars of cash flow from this console cycle. And then that time it was trading at 300 million. So I think there's really nothing much for me to lose. Even if the company were to go bankrupt and sell everything, I would have my almost my capital, like full capital back to me. So that's the reason why I invested in GameStop. And also because the way people think, right? Because now when I look at the sales from Sony, right, basically the digital games, right, it was actually around 37% sales of digital games. So I know that it's going to change. So then when the squeeze were to happen this time, it will not be as intense as the last two. I think there's still some leak. But then at the same time, people who are gamers, they like to because I asked around with my friends, right? They like to have the physical disc because for the blockbuster games, they like to collect. Because it's almost like a collector's item. And secondly, because they like to have a game that has some residual value. It's almost like books, right? After you finish reading, and it was just an okay book, but then if you can trade it in for like a few bucks, you would do it, right? So I think that will continue to happen for GameStop. And at the same time, this is a game that you also want to be able to bring to your friend's house and play, right? Because when you download a game, for example, if you download like Cyberpunk, right, it's 102 gig. On an average internet broadband speed, that will take about 6 hours.
You're never going to play Cyberpunk on the PlayStation 5. But anyway, yeah, it's true. Digital games there's a bit of a drawback. You need to log into your account on your friend's console, and then you can download it, and then you can play. And then once you log off, you can't play that game. So there's an advantage to having the disc there. It's a lot simpler. You just pop it in, play it. Then you still got to download certain things, pop it out, have fun with your friends, and then that's it.
Yeah. And once you're done, just sell it off.
Yeah, and once you're done, you sell it, unless it's your favorite games. And the thing about this console cycle, like PlayStation 4 and 5 and Xbox as well, is that your old games can be played on the new system as well. So that helps with the console cycle. You know you're going to buy the next generation of games of the system because you can play your old games still, and that's a great thing. Yeah.
So the whole disease, I guess, is like GameStop is not going to be a stock that's going to die immediately, but the short seller are expecting them to go bust right away.
Yes.
With the short interest of...
It's just, for them, it's just a matter of time because sales has been going down 30% year over year.
They also have been recording negative profits also, right?
Negative profits.
But I think the thesis right now is quite clear, is that it's a very deep value play. There was a console cycle coming in, and that's why you got in. And I think if you go to the article that we have on our site, I think Kenny kind of lays it out pretty clearly what he expected from his investment in GameStop back in March last year.
And the article was a less viewed.
It's one of the
because it's a dying business.
So when I published it, right, and I noticed the stats on the article, not many people were actually interested in GameStop.
That was at the peak.
But anyway,
but that's precisely what happened because there's no interest on it, right? When the real interest comes, that's where your share price go up, right? If it turned out the other way,
So
with GameStop, because what I thought is they have about 121 million left to repurchase shares. So if this cash flow were to come in, they repurchase shares, right? Use everything up and repurchase at $4 to $5. So when they reissue the dividends of 150 million, which they have been doing for the past 2 to 3 years, that will give me a dividend of about 450. So that's about 100% dividend. So there's really nothing much for me to lose at that point. And for GameStop, the thing is I don't really need it to like turn around and grow tremendously, but because the sentiment is so bad, like 100% short interest, that a slight change in sentiment will cause it to pop. And eventually once it pop, and if they were to reissue the dividends, right, people will rush into this company and eventually
that's where when the catalyst take place, right?
So the catalyst take place, and then it will short squeeze, and then once it's over, because to be honest, after this console cycle, I don't think there's any more to GameStop.
Okay. So I think we've spent some time with the why you invested. So I think people will want to know right now is like, why did you sell? The price was exactly kind of a bit flat most of the year. And then it started to go up, and then all of a sudden it's gone parabolic. But that's for a different reason altogether at this point in time. But we want to know what happened leading up to your sale, during the events, and then your rationale of why you finally said, okay, I think I've reached the sky, I'm going to cash out.
So when I valued the company, I was thinking it would be worth about $25. But then, of course, things changed, right? Ryan Cohen came in at around $6.80, and then he bought more at $9 and overall he owned about 12% stake. So that activities actually drove the share price up. Then after that, they also announced preliminary earnings, Q4 earnings for the console cycle. So in my mind, it's like $25 is my target price. $50 would be like a short squeeze, and then a big squeeze would be like $100 for me. That's basically what I had in my head, because it's very important for me to have like targets in my head that I know that based on certain things that I'm looking for, and if it's not there, I'm gonna leave, because it's basically risk management, right? And if it still plays out, then I'll stay in the game and play the game, right? So for me, it's after it hit 20, then after that it surged very quickly to $40.
Yeah.
Without you knowing.
Yeah. Without knowing. Because when it hit 20, it stopped for one day. Then I was like, okay, that's it. Because the thing is, when it comes to market, it is forward looking, right? Yeah. So they know of the console cycle. They know Ryan Cohen is involved. And then maybe if there's no reaction, that means it has all been priced in, right? So when it squeezed to 40, I was like, okay, that's probably it, right? So then I'll probably wait one more day or so, see, because squeeze usually take a couple days, right? But then the following day, it squeezed all the way to $76.
Intraday, right?
Yeah, intraday. And because it moved so quickly that it stopped twice. It got halted twice. Halted twice and it came back down. Then I was just thought like, okay, that's it, man.
Yeah, I mean, $4.50 to $60, $65, $70 is a dream for almost any investor. So
and that happens almost in less than a year.
The real squeeze only happened in a space of a couple of days, actually. Right.
So I think the moment I've been waiting for my whole life has played out. So I was just thought like, okay, $60 odd. But the thing is, from here on out, there's no fundamentals really, because I'm only in it for the squeeze, and the squeeze happened. But the thing is, how high will it go? I have no idea.
So for you, there was a kind of they say it was a gamma squeeze. If you go to like Wall Street Bets, and what you're reading is a gamma squeeze on that Friday that you sold at 65. The real squeeze hasn't actually happened yet. Yeah, because the shorts are still over 100%. So they haven't, for the squeeze to basically like start and kick off, the shorts have to cover down. But you sold at around 65, and that was it. You felt that it was just too expensive, and you weren't banking on the squeeze going to the moon, right?
Yeah. I was waiting, but I didn't get to the moon.
So the rockets were firing, but you're like, I'm just happy.
I'm just happy, because the thing is, I do not know what's going to happen from here on out and how high it's going to go for me. So that to me is risk. I mean, I would love to make more money, but then I think I need to know my boundaries.
So you choose to eject while the rocket was still moving.
At
least I know I can land safely somewhere.
That's a really good point. So I think right now, I probably want to discuss what's happening with GameStop right now, because the GameStop is at about $325 the last market close. It went as high as $500, I think, on the Thursday pre-market. So I mean, first question people are going to ask you is like, hey man, you could have sold at $300, right? How do you feel? But you already said that, I'm happy to have taken what I've had, and I've landed safely. All right, so what are your current views on GameStop at this point in time? I know you said that it's not based on market fundamentals anymore, but what do you think is happening with GameStop right now, with Wall Street Bets, mainstream media covering it, and what's going to happen?
It's hard to say what's going to happen. If I know what's going to happen, I wouldn't be here. I'll still be in the stock. But the thing is, right now, I think it's a war between the shorts and the longs right now. And then it's really almost like a zero-sum game. Like, see who's going to win and who's going to hold out and push it through. And how far it'll go, nobody knows. But then I think there are a lot of people that's going to make a lot of money, and there are a lot of people that are going to lose the money, because it's all about who's going to hold the bag.
It has to come down eventually to a more reasonable price, right? Closer to its company fundamentals. But at this point in time, it's being pushed up because of the play on this short squeeze.
But it's funny how it has garnered so much attention from so many people. I think a lot of people that, like some of my friends who are usually conservative investors, but because of the surge that they've seen, and a lot of people think that the short squeeze has not played out yet. So everyone is piling into the stocks without thinking about when are they going to exit, where is their stop loss. So that's very risky. So the thing is, it's almost like a casino. If you have made like 100 or 200%, when is it time for you to get out? Because you think like, oh, I'm a genius now, right? I'll probably keep going on. Then you keep going on. Then the time you leave is when you lose money. So I think it's very, 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 very dangerous right now. Of course, the gamma squeeze, I mean, when it comes to options, that will give them that extra edge to push the stock further from here. But then we do not know how the SEC will regulate. And also, you have a one-man Wall Street bet that also moved the market. That is
Elon Musk.
Elon Musk
has real rockets.
Yeah. all he did was just he tweeted Gamestonks, and then all his Tesla buddies, all his Tesla fans all come in and
I actually have friends that who follow Elon Musk, right?
Yeah.
So any stocks that Elon Musk tweeted, he will go and buy because he knows that it's gonna go up.
So basically now, I think especially the Chinese right now, if you go to the social media, you can see that they put the God of Fortune, but they changed it to Elon Musk face.
Yeah, but this is really interesting because it's taken on like a global phenomenon.
Yes.
Everyone knows that the hedge funds were overshotted
Yeah.
GameStop, and they haven't covered their positions, and they have to cover it someday.
Yeah.
And they're bleeding interest at this point in time. And I mean, if everyone is kind of like piling in, right, from people from like China, Asia, Europe, the whole world, people in Singapore, and everyone just kind of like just buys and holds, the short squeeze, the short sellers could just cave eventually, and the real squeeze really happens. Do you think this is going to happen, or you think people right now, because it's so mainstream, you get people that just coming in to get a quick profit, they're going to jump out, and then the squeeze never actually really happens?
That could be the case, because when it comes to squeeze, is that there's something called the rolling shorts.
Okay.
So the old short sellers will be squeezed out, and the new short sellers will come in. Because as much as people are timing when to exit, the short sellers are also timing when they should start a position, because they want to ride all the way down, right? Because now it's high.
That's the cliff, right?
Yeah.
The cliff,
So then a lot of my friends ask me, is this a good time to invest? I say it's no, because when I invested at the time, the risk reward ratio I get, it makes sense, right? But now, and it doesn't make sense for the short seller then, because at that time it was $4. So how much more can you make, right, from there? But then when it comes now at this price, the short sellers are basically, they have the upper hand. The new short sellers that came in at a high price, they have the upper hand over the longs.
The longs at this price.
The longs.
If you got in recently at maybe over $300.
Yeah.
So maybe your risk reward ratio is not as attractive at this point in time.
The thesis is you go up to $1,000.
Yeah, 1,000 is not a meme. It's crazy. I mean, I've been following it since it was 65 for me. I mean, not as early as you, but to see the prices go up to 500 intraday was just bonkers, actually.
All this happened just within 2 weeks.
It's kind of crazy. This is the first time in the history that we are seeing coordinated move by the retail investors to kick out the hedge fund.
So I think a lot of my friends asked me like, a lot of them thought that I made it cause I was riding the wave and everything, but then I told them I wasn't gambling. There was this real story behind it, you know, and I know and that's the reason why I went out at 65, because it's like I could have YOLO'd like the rest of them, but then I
you should ask them to read your article since you wrote in March 2020.
I think that's a story. I think that's not the way you should invest in the stock market. I say you should come down, and I'm also not afraid, because I know I can find new ideas. I can make money slowly from here on out, and it doesn't matter to me that
not every investment has to be a GameStop.
Right? And of course, like a lot of people also, when you make money so quickly, you really have to come down and really think and come back down to earth, you know, because a lot of people you just make you double triple your money in a very short period of time, and you want to apply that to all your other stocks, or you want to look for the next GameStop. But realistically, a stock like GameStop will only come maybe every 5 years, every couple years, right? And it's very hard to spot. You really need to spend the time to look.
I mean, GameStop at your point in time, this GameStop right now is probably may not happen for a really long time.
And it might not happen in the same way. It might not. It might have a different situation, be in a different situation, and you need to be sharp enough to find it.
But I mean, I personally have a small position in GameStop right now, just to see how the squeeze plays out. And I mean, there's some market fundamentals to that play. But if people were going to go like all in, some people have on Reddit saying they've like taken on loans, and remortgage their property and stuff like that. It's extremely risky. And the money that you put in now has to be something that you can afford to lose. Whatever, a month of your salary or 3 months or whatever, you lose that. It's not going to change your life. But if this squeeze really happens to the moon, then there's a potential payout there.
Yeah, but you don't change your life, lah.
So if it goes the other way, it will change your life also.
If you basically bet money that you can't afford to lose, that will change your life.
So that's why I tell most of my friends. I say, if you need to have two hats. You need to make sure that if you're a speculator, if you're gambling, you need to go with a gambling mindset. If you're an investor, you go and get an investing mindset. You cannot mix. You cannot be suddenly a long-term investor, then the stock drop, and then you still decide to sell, because I think most of the time, because they do not know what they're investing in. So when the stock drop, then they just bail out of the stocks. So then that could be very dangerous. So then when you're gambling, if you know you're gambling, always gamble with the amount that you know you can afford to lose. And then if you win, you also need to have an exit strategy, right? Because you don't know where the moon is.
We don't know where the moon is. We don't know where the real one is, but we don't know where GameStop's moon is.
But of course, there's still risk in the investment that you're investing in GameStocks, right? I mean, if SEC were to come in and just shut down and suspend the GameStop stock, a lot of people's wealth will be stuck inside, So that's a big risk also. So it's still up to SEC what they're going to do.
I actually covered a few risks that you need to watch out for if you are a GameStop shareholder, that you need to watch out, before the thing could actually reach the moon, or even if it actually takes off, you don't know.
You want to read the article if you're interested in GameStop.
Go to fifthperson.com. It's actually our article right now. So
maybe you can post both of the articles, the links and the description box.
Do check it out. We put in a link in the description as well. So I think I think we've pretty much wrapped it up. I think Kenny has shared his journey with GameStop back in March all the way to now. He's made really good returns on it. I think we want to congratulate him one more time. So good job. Congratulations.
And we are going for a good lunch. Like Kenny.
So we hope you learned something from it as well, because this doesn't come every day. So thank you so much for watching this. If you really, really like this video, just hit the like button. Subscribe to our channel as always, because we have more roundtables like this coming up. We have so many things to discuss. I don't know, maybe we could be discussing GameStop again, because this could play out for some time. We don't know.
Sure.
And thank you so much for joining us. You are the fifth person joining us, the four of us today. Thank you so much for watching, and we'll see you around again.
See you.